Welcome to the Self-Storage University podcast, where you will learn the correct way to identify, evaluate, negotiate, perform due diligence on, renegotiate, finance, turn around, and operate self-storage facilities. And now, here is your host, a partner in one of the largest real estate portfolios in the U.S. with nearly $1 billion of holdings, Frank Rolfe.
Most real estate buyers in America are drawn like moth to a flame to what we call hot markets. But the problem is that hot market can often leave you burned. This is Frank Rolfe with the Self-Storage University podcast. We're going to unlock what hot markets are all about and how you need to approach them. So let's first go over the definition of what is a hot market. Hot markets are the markets that always seem to come up in discussions. They always make the lists online. Every broker touts the fact that, this storage facility is in a hot market. And so these are kind of the attributes that we have found relate to a hot market. Number one, very strong growth in population. So I don't know of any market defined as hot in America where you don't have a lot of people moving there, whether it's Nashville, Tennessee, or Dallas, Texas. So population movement, that would be part of being a hot market. And then typically in hot markets, you have lower cap rates because you have more competition. There's more people trying to buy properties in the quote, hot, unquote markets. So that's another attribute is things are more expensive. And then you do have typically stronger lender favorability because the lenders are just like real estate buyers. They hear it's a hot market. They get all excited. Oh, this storage property, well, this thing's located in Las Vegas, Nevada. So it's in a hot market. It must be safer than other deals, they would say. And then typically you've got higher pricing because you've got rents typically that are higher because everyone sees the growing population and gosh darn it, we're in a hot market. So let's raise those unit rents even higher. And there's typically little supply because it's what they call a seller's market. So people are holding off, waiting for values to climb even higher because they know with greater population, it's going to make it even more valuable. So why sell today when I can sell tomorrow for even more money? But the problem is that everything I just mentioned, every single one of those items are not good if you're a buyer. Right? So if I'm a buyer, why do I want to go to a market that has lower cap rates and higher pricing and high rents and all these other things? And the answer is you wouldn't. That's the problem. People are like lemmings. They all follow each other. The lemming is a little creature that will dive off a cliff to its death, following all the other lemmings that dive off the cliff. You don't want to be one of those people. You don't want to follow the Joneses and just to your ultimate financial ruin. So when I think of a hot market, when I hear the word a hot market from a broker, that's a market I find that I'm repelled from. Don't have any interest to be in the quote, hot, unquote market. Instead, the key to it all is to buy in the markets before they become hot. So think about that for a moment. If we're saying that a hot market is a seller's paradise, and a hot market displays highest rents and lowest vacancy and greatest demand and highest prices, then the whole key to playing the hot market game is to not buy in a hot market, but to buy in a market that's not hot, that you know will eventually attain hot status. You know, we were buying properties down in the Austin, Texas area back before Austin was considered a hot market because we saw the promise of it. It's capital of Texas. Capital cities typically do really, really well. We could tell from the location on a major interstate of I-35 and the fact that we've got a whole lot of commerce that goes on with Mexico, which goes right up 35, that Austin had a great future. But there was a period in time where Austin wasn't thought of very much, and it really wasn't a, quote, hot, unquote market. So really, the key is, if you want to play the hot market game, you got to get to it first. And you have to be watching for markets that will become hot, which then begs the question, how do I know a market is going to get hot? Well, think about what we just said. Hot markets are where people are going. Hot markets are where jobs are forming. So we can kind of map that out. You can look at, right now, the stats on where people are going. People track such issues as U-Haul, where those U-Haul trailers start from and end, to give them a very clear indication of where Americans are moving from and to. And you can go to any city in America, and you can get from the state and county and city lists of all of the roads being built, all the way from interstate highways down to regular old state highways, all the way down to major secondary streets. And you can lay all of that out, and you can start to get a pretty decent idea of where things are happening. You can watch some of the people who typically are precursors to population growth, like Walmart, and where those are going in. And you lay all that out on a map, and you can kind of see what's happening. We know from a macro level, for example, that a lot of people in the north are moving to the south. We also know on a macro level, a lot of people in urban centers of America are moving out into suburbs and exurbs. So you can watch that population movement and get a really good initial handle of what we think will ultimately be hot. But also you have to do some forecasting. You have to say to yourself, okay, where do I think people are going? Where do I see the new opportunities in the American economy? So you have to become educated yourself. Read a lot of things on these various issues and concepts. And if you read a lot, eventually you will start to visualize where you think the future of hotness may be. And when you figure out where you think the future hot markets are, that's when you want to buy. Before they're hot. When you buy things after they're hot, what happens to you? Well, we can simply look around at self-storage owners who have bought in those hot markets, and you can see they're not doing well right now. You've got decreasing occupancy, you've got decreasing rents, you've got decreasing values. Many of those folks who bought self-storage units in those hot markets today are underwater. If you look at their mortgage, now that it's been reassessed with higher interest rates and higher cap rates, you may find that where they thought they had equity in their properties, they in fact have none. And you have the greater problem when you're in a hot market, that a hot market has only one direction to go, and that's down, to become cold. So that's the other problem in buying in the hot market is you've got everything working against you and nothing going on in your favor. The bottom line to it is there's nothing wrong with hot markets, but only if you got there first and early on before they became hot. This is Frank Rolfe, the Self-Storage University podcast. Hope you enjoyed this. Talk to you again soon.
Thank you for listening to the Self-Storage University podcast. Be sure to visit us at ssupodcast.com, where you can learn the correct way to identify, evaluate, negotiate, perform due diligence on, renegotiate, finance, turnaround, and operate self-storage facilities.